Hi, this is Raghee Horner, and welcome to today's topic. We're going to be talking about looking at the euro, the dollar, and the Dow, and the connection that they all have in terms of not only the personality of Forex, or I should say the half of the Forex part of this trio, but also understanding what the dollar and Dow say about risk, not just here in the States, but risk generally speaking. I think today, actually, I'm stoked to be talking about that topic today because the timing really is perfect. All day long I've been watching what the dollar's been doing. We've been seeing that dramatic pullback in the dollar, which is nothing but a correction. And we can see at the same time, let's focus in on this euro US dollar bounce that we've been seeing here today. So we're getting this rally in the euro US dollar. We've got the pullback in the dollar index, and by the way, that's the kind of relationship that we're used to seeing. We're used to seeing that when the dollar is weak, we see the euro rally, and if I zoom in even intraday, you can see the degree to which we're continuing to push up. Now, what's interesting about this trio, and what I'm really wanting to dive into today as we look at the rally in the euro, we look at the pullback in the dollars. I want to talk about the overall directional bias, not only in the euro, which still is in very much a downtrend on the daily chart. Again, that daily chart is what we use to take that directional bias reading. And for those of you that are not familiar with what I mean by directional bias, all that is my way of describing the dominant psychology. And I really do believe that the dominant psychology is reflected best in the daily. That's the one that I think most market participants will watch to make a decision about the overall trend and therefore the psychology of any market, stocks, futures, Forex. And I'll take it another step further. I'll use my grab candles, my color-coded grab candles, and my 34 EMA wave to make a determination about what market phase we are in. And this is very much a downtrend. This is very much a classic 4 to 6 o'clock downtrend, which means that in terms of the psychology of the euro US dollar, I don't think I'm giving anybody any kind of news flash, but I think it's important to consider that in the context of any downtrend, what we want to keep in mind is that we are going to continue to see, I believe, selling pressure come in on the corrections of this downtrend. In other words, anytime we have a dominant psychology that is bearish, when I step back and consider what type of reaction I'm likely to see from market participants, it usually is going to be that in a downtrend, traders will position themselves at resistance levels, in other words, levels of exhaustion in terms of the bounce, or position themselves as support breaks down through. So right now I'm much more interested in where this market could exhaust. So let's dive deeper into that. But I want to make sure that everybody knows that we're going to be talking about the dollar here today. We're going to be talking about the Dow. We're going to talk about the interesting action that we happen to be seeing today in the dollar Dow. We're not getting that typical push-pull. I'm going to share with you what I feel this means regarding the future of the euro US dollar and the psychology surrounding today's optimism. And then we'll talk about how to possibly position ourselves not only within the context of the correction if it does continue higher, and which time frames to focus on, but also what to do eventually when we reach some decision levels on this daily chart. So we're going to jump through really three major charts, dollar Dow, euro US dollar, and dissect what's happening to risk and what's happening in terms of optimism and how we could set that up for potential trades. If we dive deeper into the rally that we're seeing here, I think the first thing that we can pretty much assume is that the 5, the 15, and 30-minute time frames are all heading up higher. Now, I mentioned the 5, 15, 30 specifically because remember that the downtrend on the euro US dollar, the one that is still very much intact, dictates that any kind of long position will be counter trend. So that's really important to remember that the downtrend here when we look closely, and I don't think it even takes that much, it doesn't even take that much of a close look, it's clear to see that we're very much in a downtrend. Now, if we jump on over to the 5-15-30, the uptrends are obvious. I mean, heck, if we go to the 1 hour and even the 4 hour charts, you can see the bullishness, even though they don't really have, well, maybe a transitional uptrend here under development, and certainly we can see the bullish momentum as we've gone from red grab candles, which is bearish, to neutral, blue, and then now the bullish momentum has turned the current 240-minute candle green. We can see the bullishness there, but remember that because of the daily time frame and that bearish directional bias, if I want to get long, and that's fine, but we want to do so on a shorter term time frame that will put us in a position to not have to rely on longer term counter trend organization of sentiment and momentum. We're swimming upstream. You know, the best way I can put it is we've all been to the mall or somewhere where there's an escalator, and you always see that one poor schmo who is going the other way up the escalator for whatever reason, or whether it's a kid who's trying to be funny or it's somebody who just decided that they don't want to take the ride down or up, they're going the other way on the escalator. I'm pretty sure we've all seen it. It's a sight. It's exhausting, and it can't be kept up for too long, can it? The escalator is going to win. Well, the escalator in my scenario here, this metaphor, the escalator's direction is the trend. Can we go against it? I think for a short time that person can make some pretty good headway against the escalator's direction. Same thing here. We can have, absolutely, a healthy bounce and even some bullishness against an overall downtrend. But the escalator is going to win as long as it's moving. And here, as long as we're moving lower at a 4 to 6 o'clock, the 12 to 2 that we're seeing intraday is certainly counter trend, and it's a correction. So, by focusing on the 5-15-30, I'm focusing on a short-term intraday uptrend within the context of an overall downtrend. I hate to be so repetitive here, okay? But what's interesting to me is how often people will see a move like what we're seeing right now on the Euro-US dollar and get long-term bullish and get aggressively bullish while we have, especially in a long-term time frame, while we have an established downtrend. I have no problem with getting long a market that is in an overall dominant bearish psychology, but I want to do so in a way that doesn't make me have to expect, for in the case of follow through and seeing potential profit targets. I mean, that is after all why we'd want to get long, right? We want to get long so we can potentially profit from being in that long position. I don't want to put myself in a position where I have to see longer term moves higher in order to reach my profit targets. I think that is one, not taking advantage of the movement in the best way. To me, the best way to do it is short term. I hope I've driven that home, because it's something that I see people doing over and over again. They neglect what the dominant psychology is, and then when they see a move like today, they get entirely too bullish and start looking at longer term buys that are based upon the psychology that they view on a 1 hour or a 4 hour or heck even a daily chart, when in reality this could be absolutely benefited from on a much shorter term basis, and it lets you stay nimble. You know, I have to kind of digress here for a moment, but I don't know how many of you have been over to the Daily Forex Trading Edge over the past couple days. So one of the things that I had been writing about while the dollar index was getting hammered earlier this week, starting with, I think, a lot of the indecision. We'll cover this today. I think some of the indecision that we're seeing as far as what the Dow and dollar are doing and what that means to pairs like the Euro-US dollar, the dollar Canada. I talked about the indecision. I went over to the Aussie yen, which, by the way, on the daily chart has no directional bias, and then discussed a couple intraday plays. One was a short-term 15-minute short play based upon a wave CCI, but then respecting the support of the 60-minute chart. And the reason I was being so cautious and not expecting longer-term follow-through was because of the lack of any kind of trending directional bias. So here we have a situation where the bears nor the bulls are in control, and that also leads to a lack of longer-term follow-through. Now today, with the Aussie yen really sinking pretty rapidly, we can see the follow-through that we're seeing from this overbought level, which is what I had initially started this update discussing. The fact that we're up near the ceiling and that the likelihood for the selling pressure to come in was greater because of the resistance that we were reaching. But everything was about keeping the trades intraday, short-term, 30-minute, 15-minute, 5-minute, because the basis of the moves, as I mentioned here, was this risk-on attitude. The equities were rallying, and the dollar was pulling back. So if these trades were predicated on this idea that the dollar's correction was tradable, and that dollar weakness is really what fueled these trades, I don't want to take a longer-term approach, do I? Hence the shorter-term time frames. And when the dollar finally came back around, when it rallied, I returned to the discussion where, betting against the greenback is still a bad idea on the longer term. That doesn't mean we can't capitalize on the corrections lower, like we're going to talk about here today, but that we want to keep it nimble. That we don't want to jump into this dollar bearish attitude, even just because we had a couple down days. Very important. And how the shorter term time frames were also sensitive enough that when and if sentiment would shift, we could jump back on the overall trend in the dollar. And that's what this particular update was about today. Today's update is about how long will the optimism continue? In other words, where are the trends going to correct to? And that's actually the exact topic of our discussion here tonight. But if you're not already keeping up with me over at the Daily Forex Trading Edge, it's a great place to post your questions to me, as well as keep an eye on my analysis and what I see in the market every single day. So let's get back to the intraday time frames and discuss what our options are, because I'm not going to assume that the euro's done here. I'm not going to assume that the correction's done. In fact, we should not assume the correction is done until it's done. Now, how do we know it's done, right? Well, this is where understanding that time frames are like building blocks will come in handy, because the daily chart bounce is not going to exhaust until we reach resistance. And the easiest way to identify where selling pressure begins to build will be looking at the 5, 15, 30-minute time frames. So the reason I call them building blocks is if the daily time frame is like a wall, the individual bricks are those short-term time frames. So until the 5-minute starts to congest and begins to find resistance and maybe flattens the 34 EMA wave out and then maybe breaks the 34 EMA wave, same with the 15, same with the 30, until that happens, we're not going to see the daily top out. So then what we want to do is remember that in the meanwhile, as long as the trend is up, I can play between the greens setups on the 5-minute time frame. So here's the view of the between the greens on that 5-minute chart of the Euro-US dollar. For those of you that are unfamiliar with between the greens, the 4 moving averages that you see there, the greens, which is really the heart of the setup, is the 13-period exponential moving average. Okay, that's the light green. The darker green is the 21-period exponential moving average. They're both on the close, by the way. We, of course, have the 34-period exponential moving average, which is also the middle line of the wave. And we have the 55 period exponential moving average. So they're all on the close, and they're all based on Fibonacci numbers. So the between the greens is one way that we could take advantage of the movement, because it's intraday, it's trend following, and it's also going to be sensitive enough to shifts in sentiment and momentum, where if the bullishness does at some point exhaust, which is my expectation, you're not going to be left holding the bag in a longer term time frame where you need much more bullish follow through to see one of your profit targets being hit. So again, that 5 minutes one to watch. The 15-minute, now the 15-minute, and this kind of price action, this kind of really bullish price action, all this kind of, it's a little overdone. The reason being is, notice how few corrections we're getting, and notice the way it took off. When we get this type of kind of an overreaction, it's kind of a blast off, it's more of a spike than it is a rally, right? There's a big difference. A rally is kind of like a very strong trend, and they'll correct. A spike is just a lot of enthusiasm, and then we have what's a little bit more a healthy rally. So kind of a spike began this morning, and then we've got more of a rally subsequently. Now, the issue with this is the pullbacks are nowhere near significant enough to even get to even the 20-period simple moving average or the wave. So at that point, you're really left with trading this a little bit more aggressively and using tools like Fibonacci to identify corrections, in which case you want to see at least some sort of to me, at least a 38.2% correction in order to get long. So we got one here. Where might we see another opportunity to get long if the trend continues? We could do something like this and look for a pullback to, say, 28.23 or this 38.2. So keep an eye on the, try that again. I think I missed a low. Here we go. Yeah, I'm sorry, 28.23, and look for an opportunity to take advantage of a correction to, say, the 38.2. I generally find 23.6, that 25% level, to be a little too shallow. I would like to see at least the 38.2. And that would be extremely aggressive, because the fact of the matter is my swing buy zone doesn't even begin until down near 28.07. So today's price action is challenging. And I don't want to chase this market. I don't want to be aggressively bullish, but I would love to see this continue. And the reason being, let's get over there. The reason being is if we can continue, if the dollar index can continue to pull back, to correct, at some point I could get myself near a rally to either the 28.55 level. I'm going to show you why I like that level so much. 28.55. And notice this was the previous low. I had a low here, right there. And what I would like to see now is if that low, the old saying, what was once support holds as resistance, what I'd like to see now is a selling pressure come in as we approach that level. That's the idea behind that. That would be an extremely aggressive level. The next level I want to watch, and where my swing short zone begins on the Euro US dollar, would be at the 20-period simple and then the 34 EMA low. It's a big zone there, 29.16 to almost 1.3000. That's a huge zone. So if you are going to get in aggressively, just remember the conservative swing doesn't even begin until the 34 EMA low. Now, could we pull up a Fibonacci here? We could. And you'll see that the golden mean and the 20-period simple overlap, and you'll see that the 78.6 and the 34 EMA low overlap. So great reasons to watch those levels regardless, because now you have multiple participants considering these levels as potential upside resistance. And I even like the fact that I've got the 50% Fibbo so close to that 28.55 level, which is also just 5 pips above my 28.50 major psych level. So a lot of reasons to consider one of these three levels to be a level to watch in terms of exhaustion. Right now the bulls have their hands full just to keep this pair above the 38.2. And let's also consider what is going to be required to keep the intraday rally going. Optimism, which really was the perception of how we're translating some statements and the headlines that are dominating today, that's what's got us moving the euro-US dollar higher and therefore the dollar index lower. The issue here is, once we've digested this, and in many ways we could argue overreacted to this, unless we get some reason to feel just as bullish or satisfied with our decisions today, come Friday we could have a whole lot of buyer's remorse for the single currency. So we've got to be reassured tomorrow. Does that mean Draghi's got to come out or somebody's got to come out and make us feel good about how bullish we were about the euro? That's really what I'm thinking. And how many people really in this environment want to take a substantial long position in the euro overnight, unless we get another headline, which again would reassure us that our reactions today, our bullish reactions today, were justified. That's the tricky part. That's the part that we have to consider before we, generally speaking, continue to be bullish and continue to buy into the uptrend intraday across the 5-15-30. Notice my only intention for the daily is focusing in on resistance and focusing in on where I can position myself as a short seller. Different time frames represent different slices of psychology. I have no problem embracing that bullish psychology here, but I will do so on a short-term time frame. Now, I realize not everybody has access to a dollar index feed or a Dow feed, and that's fine, which is why I'm going to use the finviz.com site. Now, this is a free site. If you want to register, you can. If not, you can actually access most of what this site offers just by visiting the site. You don't have to register, all right? It's just a site that I like for a couple of reasons. One, I really like this futures scanner because what I can do by clicking on that link right here is pull up all the commodity futures. You can see the currencies down here. The Dow is here, as is the dollar. And let's take a look at the Dow. It's a daily chart of the Dow. And one of the things that I think a lot of traders are finding very interesting, number one, we lost our 12,400 footing. We pierced it a number of times. That 12,400 level was broken. But with all the weakness that we see on the dollar index today, and we'll go over there in just a minute, with all the weakness that we see, take a look. For the most part, most of the morning, we're getting a little bit of a lunchtime rally here, but most of the morning, we've seen the Dow sink lower and lower. Now, this is unusual because usually what do we see? If the dollar is moving lower, that typically is reflective of risk appetite. Risk appetite would be high. Why? People are very optimistic about the potential positive headlines that are coming out of Europe, right? But when I head on over to the US dollar, you can find that right down here in the corner, and I take a look at that chart, and I zoom into a 5-minute, take a peek. We're heading lower here too. A little bit of a 10 a.m. bounce, and we're heading lower. So why would we, number one, see the bounce? And why is it that we're heading lower on the dollar index but not heading higher on the Dow? I think a lot of people would point to the fact that we had some lackluster Sales numbers this morning, core retail sales were a miss. And when you consider the optimism coming out of Europe, I think it makes more sense that the dollar is down, but it doesn't make a whole lot of sense that the Dow is down. Why the confused message here? And I'm not thinking, and by the way, I'm not suggesting that anything is awry here. I'm not suggesting that anything is wrong here. What I am suggesting is that when we see the dollar and the Dow moving in such a way that we don't see that normal relationship of stronger Dow, weaker dollar, or stronger dollar, weaker Dow, we're actually seeing a fairly weak to flat Dow and a weak dollar. What is the market trying to tell us? Kind of take out of your mind the fact that anything's wrong, that the market is wrong. There's no such thing as the market really being wrong. So what can I take from this? Well, this goes back to what I was mentioning as far as an update that I had written over at the Daily Forex Trading Edge. And that was that the Forex Market Pulse, which of course includes the dollar and the Dow, continue to point to indecision. There's confusion in this market. We're reacting to a number of things, and we're doubtful about some things as well. So when I see that the Dow and the dollar really aren't moving in the way that I'm accustomed to seeing them move, when I can't look at these two and get an idea of where fear is or where greed is, in other words, can I gauge risk? If I cannot gauge risk by looking at these two, that means that there's a blurry picture, and in a blurry picture, what happens? If you don't know where you're going, do you tend to run in one direction, then turn around and run in another direction, and kind of like a mouse in a maze, right? The poor thing doesn't know where the out is, doesn't know where the exit sign is. So what does it do? It's kind of scurrying about. It doesn't continue in one direction because there's no confidence. So that's a lot like, to me, what happens when there's a blurry picture on the risk front. On what, and by the way, what does all this kind of reflect in terms of what the euro is doing today? I don't know that anybody really long term is buying into this. I mean, I should say buying into it philosophically, buying into it theoretically. They are buying, obviously. I don't know that anybody is convinced. That's probably a better way of putting it. I don't know that anybody is convinced that the euro really is out of the woods here. When you look at the fact that the euro is rallying and the dollar is down, okay, you got me there. That works. That's clicking the way it normally should. But when the Dow is not along for the ride, and I know a lot of people will point to retail sales and even unemployment claims, which are higher than expected. More people file for unemployment claims. I think we expected 373,000 as the forecast. The actual was, I think, 400 or 399. So it was worse than expected. Again, both retail and core retail were disappointing. But I think, again, the challenge that we're going to see for traders here is, can they put their finger on risk appetite or risk aversion? And I don't think they can. I think that a lot of traders have seen bullish headlines out of Europe before, and while they're intraday willing to run it up in reflection of that, longer term, once prices reach a significant resistance level on the daily chart, it gets sold right back into. Let's not forget. Let's not stray too far from that daily chart of the Euro US dollar. We've seen this before, right? Here it is. We've seen rallies before. We've seen corrections before. And what happens? It gets sold into. Because while there might be a near-term reason to be optimistic, overall there seems to be this consistent pessimism that has been pressuring this pair lower. And frankly, as long as the Dow can't find enough footing, I think the Dow is still having a very difficult time, while it is certainly up near the top of its rally, it's having a very difficult time getting beyond that 12.5 level and finding bullish momentum above it. So yes, we're bullish in terms of the movement to as far as where we've gotten, but we don't seem to be able to find the bulls willing to carry us higher through 12.4, 12.5, and beyond. And as long as that's the case, the beneficiary of that lack of conviction is going to continue to be the US dollar index. And I think that's how that game continues to be played. But what it does is it's giving us, and by the way, to make things even more interesting, and these are for geopolitical reasons mainly, look at crude oil. So crude is hanging on to gains and arguably in a kind of shallow uptrend. The Dow is hanging on to gains and arguably in a shallow uptrend, but neither one has the conviction to move to that next level. What's that next level? 12.4, 12.5 in the Dow, really north of 103 on crude. And while we lack that conviction, again, the bullishness in the dollar will continue because, in my opinion, risk is still off the table regardless of the fact that we're having this rally in the euro. And it's a rally, it's a correction, it's not a trend reversal. What could happen here, though, eventually? Could we see that we transition out of the downtrend in the euro US dollar, or transition out of the uptrend on the dollar index? That's certainly possible. When I say transition, I don't mean going from a downtrend to an uptrend, or from an uptrend to a downtrend, say on the dollar index. What I'm talking about is a transition where the selling pressure puts in some sort of ceiling and we transition into a sideways range. At the top of the range here on the dollar, the bottom of the, at the top of the trend here on the dollar index, and at the bottom of the trend in the euro, just kind of bounce around and find a sideways volatile range. Kind of distribution in both cases. That would be one transition. I'm not expecting an all-out reversal. I don't think we have the support fundamentally or even technically for that yet. So transition would make more sense. But I'm getting ahead of myself. I'm just kind of thinking about potential scenarios. For now, the scenario still is there's a downtrend in the euro US dollar, there's an uptrend in the dollar index, and I'm going to continue to behave and set up my strategies in a way that reflects and respects those trends. Okay, so I hope that what you've taken away from our discussion over the last half hour or so is the fact that the euro US dollar, near term, let's talk about near term, what the situation is. Tomorrow, what do you want to see when you wake up if you're a euro bull, if you're a euro US dollar bull? We need to see support of the headlines and the sentiment that move the markets today. Without that, I don't know that on a Friday a lot of traders are going to feel confident taking this position into the weekend, and we want to watch that sentiment and the headlines really closely. By the way, one of my favorite ways to scan headlines, and I think this is a big part of even being a chartist, is to go to the major news sites and just see what the headlines are on those sites. One of my favorite is Bloomberg. We can go to Bloomberg and basically you can just go to the news. And what I like to keep, and I actually keep these on my desktop all day. I have one open for commodities, and then I'll have another one open for currencies, and I like to see what the headlines are. Okay, another thing you can do is go to some of your favorite portals, whatever those might be. Okay, maybe you want to take a look at another site, whatever it is. Just look at the headlines that are making their way through the market. Another great kind of psychological gauge is Forex Factory. And if you scroll down and take a look at the latest news and so forth, a lot of what traders are thinking is important and sharing with Forex Factory, and then Forex Factory posts according to their new scanning standards, they'll put up here. What are the hottest headlines? What are the headlines that are making their way through? Again, I'm not interested in fundamental analysis, but what this is scanning the market for what is affecting the psychology of the market. And headlines do it. Headlines reflect and affect how it is that we're perceiving the driver, the psychological driver of the market. So those are two ways to do it. And that's the near-term picture. And as far as my being bullish tomorrow, it's going to really be what type of continuation of the sentiment can we get, and a lot of that's going to be reflected in headlines. Bigger picture, beyond the weekend, I want to keep in mind that at some point I'd like to see the dollar-Dow relationship become a little bit more of that push-pull that we're accustomed to seeing, where a strong dollar means typically a weaker Dow because risk is off the table, and where a stronger Dow means the dollar index is down, which means risk is on the table. Crude oil, be cautious because crude's moving for reasons that are completely geopolitical right now. Commodities in general, if you were to look at the continuous commodity index, which is like the S&P 500 of the commodities world, are still down. So commodities are still down, and as long as they are still down, I'm going to not assume the hope and growth type psychology. Another thing to consider is, as much as the dollar is down right now, look how much red we have across the grains and the softs. Commodities in general typically benefit, will rise in price when the dollar is weak, and we're really not seeing that. Take crude oil out because that's geopolitical. Okay, we've got gold, silver, and copper slightly higher. All right, so again, a lot of confusion. When we don't see commodities higher on a weaker dollar, when we don't see the Dow higher on a weaker dollar, we have to ask ourselves, why not? Whatever's pushing the dollar down, how come it's not presenting a risk appetite type environment? And when we lack that type of clarity, my advice then is go short term. We spent a lot of time discussing the 5, 15, 30 minute time frames because I think when the psychology is not organized, we want to retreat to these time frames because the shifts could come often and quickly, and these time frames are better situated to allow us to control risk primarily and also hopefully benefit from these shifts. So that's our discussion for tonight. Thank you so much. I hope it opened your eyes to some of how I view these markets and how I view risk and the tools that I use to do it. Check out finviz.com. Check out the daily Forex Trading Edge.com, and we'll keep in touch. Thanks so much as always for your time. I really appreciate it. Take care, and I'll see you in our next talk.